and at least in
Today
GE
indexes are up.
Vernova's case, they're sticking by it.
Yeah. It'll be
discuss.
interesting
What do
as
we
we
do?
hear from more of the consumer-oriented companies,
Tesla?
what they have to say. I know Chipotle is coming out. We're going to talk about that one
208
later in the
would be
show,
good price.
and that obviously has potential to be hit by tariffs as well.
Daily
Meanwhile, AT&T I thought was going to be a winner because this seemed like a clear beat, and shares are actually under
Trump
pressure. Although
administration
for AT&T,
considering
it is
cutting
important to note this has been a
rates?
big winner. It has,
year to date.
maybe
Chinese
far a little
tariffs
too
to be
high.
de-escalate.
Well, it may also be buy the rumor, sell the news kind of event when it comes to their earnings. Because look, their subscriber numbers were good, much better than Verizon's numbers were, and it looks like they may have been pulling some subscribers away from Verizon. And it goes to the kind of theme where we see we've been talking about consumer sentiment weakening. If consumers are making budget choices, they may be switching suppliers. So we'll go through the numbers quickly. AT&T reported 51 cents a share on an adjusted basis. That was essentially in line with expectations. They beat on revenue. Revenue was top 30.6 billion. Street was looking for 30.4 billion. Initially, shares were indicated higher, so we'll see how this shakes out through the session because it looks like it's pretty range bound right now. In terms of their growth, they had 324,000 postpaid net phone subscribers. We know that is a key metric that the street really likes to hear more about, right? It's a metric that you want to see more growth in. So that beat what the expectation was, and again, performed better than Verizon did. They also are going to be doing their share repurchase program earlier than anticipated because they've met some targets with regard to debt. They do still have some debt on the books, so that's one of the challenges when you look at that, say, compared to T-Mobile. They've both been running neck and neck this year in terms of share performance and outperforming within the group. Verizon still has a gain and is still beating the S&P 500, but nowhere near how AT&T and T-Mobile are performing.
Yeah. And neck and neck is right because T-Mobile is up 17% year to date, and AT&T is up about 18% year to date. I did see a headline from the conference call saying that upgrades have trended higher than expected since the announcement of those reciprocal tariffs. So could be some of that kind of pull forward in terms of the upgrades as well. Just finally, in terms of another name you're watching today, that's Intel. Shares up more than 6%, and this isn't earnings related. This is more restructuring related, potentially some job cuts here.
Yes. So look at this as a cost-cutting measure that you're seeing occur here, and we know that for the individuals affected, it's not great, but the way investors look at it is it cuts costs. So this is according to a Bloomberg report. Intel set to make job cuts of more than 20% of staff. That would amount to more than 20,000 employees if we look at their headcount, what it was at the end of last year. And even at the end of last year, that was a reduction from earlier in the year when they had done a previous set of job cuts, where they were targeting to slash about 15,000. So this is greater than what they looked at before. It's an aim to kind of both streamline their staff, and the goal, according to this report, is to rebuild their engineering-driven culture. That's one of the challenges that has been facing Intel. And we know in the past, before the previous CEO had left his role, Pat Gelsinger, he had talked about Intel losing its edge, essentially losing the competitive spirit that it had. Since he's been replaced by the new CEO over there, Lip Bhutan, and he's been wanting to make some changes over there at Intel.
Okay, well, we'll see how this report actually plays out. Should note, Wedbush did lower their price target on Intel today to $19 a share from $20 a share, kept a neutral rating. Intel trading higher than that right now. The median price target on Intel, $21 a share, so it's only about a quarter away from that. So we'll see if analysts start to adjust here. Diane King Hall, thanks so much. Really appreciate it. All right, coming up, we'll go inside out on IBM ahead of this afternoon's earnings. Morning Trade Live. We'll be right back.
Subscribe, give like, and share put in comments, what do you trade, what do you buy?